Okay, here's a setup. This is the NQ, the 3-minute chart. I'm going to take the analysis off just for a moment here. We had this back up here. So our trend had just turned long here on our trend indicator. And then we got the automated TS3 set up here. So once that reversal candle here, the blue candle or the blue bar prints, with one click on that, it sets up my trade, telling me based on my account size I can go long 3 contracts here at 1928 with the risk of $315 based on the stop here that it recommends at 1922.75, and a profit target just over 2 to 1 risk reward, which is the minimum that we want to look at for a potential profit of $702. So we'll see how this one plays out. I haven't quite gotten to that 100% initial risk, but like I said, our worst case scenario is we lose $315 on this. So let's see how this one plays out. Now the YM you see here has a TS4 set up. If I select that, you can see it tells me I can go long 2 contracts at 10,727. Now that hasn't been hit yet, so that trade is not in. This has a risk reward of 2.2, again similar to that NQ trade as far as the risk to reward. That's about our minimum. A profit potential of $798 if that target gets hit. So I guess we've got a couple of trades we can watch here. And we'll wait and see how these play out. Actually, I'll go back and just check on that NQ trade here. So our NQ trade here, making some progress, still hadn't quite got to that 100% initial risk there. If it does, this is kind of a tight trade at 2.2 risk reward. Typically, once we get to the 100% initial risk, you can think about moving your stop to break even. I think in this case it's going to be a little too, not a whole lot of room to work with there, and it probably easily stopped out if I move that stop, or if you move that stop to the break even at this point. If we had a little more room, you know, if this was a greater risk reward trade, it'd be easier to move that up. But so we'll just let these see how they play out. Okay, so here our YM trade, we hit that it just hit the entry there, the long 2 contracts, and then stopped us out there minus 370. But the key again is we're keeping these risks R1. In other words, we're only risking 1 here to make 2 or greater. So we can handle a good number of these losing trades, because when we hit one like we did, if you look at the trade we had in Globex last night, I'm just going to go back here and show you. Why this works the way it works. Okay, here was our TS3 setup. And let me back this up a little bit. This is the one I videoed as well last night, but didn't have enough time to finish the trade to let it play out. It was up about $1,000 when we left it, but here was the setup. Okay, it was long 5 contracts at 10,464, and you'll see our target. Our target was a risk reward of I think 8 to 1. And you can see there's our risk reward again. That comes out ahead of time. So if we can hit that target, you know, we're risking again that small $375 to try to make $3,225 before our commission and slippage. Now we've got a DP short sell there, but our trend is to the long side, so we're ignoring those. We're only looking for longs. In this case, we're still long. So came close to the target there. Getting so close, and there it is. Okay, so if we can take those trades where we can, you know, profit $3,225, we don't mind going through a few of these which go against us and we lose on the trade, you know, $300 to $400, you know, based on this as a $20,000 account we're basing it on. And let's just go back. So that YM trade is out. And let's take a look at the NQ. Okay, that one's still in, still just kind of hanging around the entry there. Just shy of the that 100% initial risk mark. So we'll keep an eye on this one and see how that plays out. Okay, so at this point on the trade, we've hit that 100% initial risk area at 1933.25. So if your rule is to move your stop to your entry point there, then you would do that at this point. Whatever you do, just be consistent and do that on all of your trades. If your stop is going to remain down here to see how this plays out, that's fine. Still got a little ways to go before you know, we can see that target at 1939.75. Okay, so again, a little update here on this NQ trade. Just a few ticks away from that target. Again, it wasn't a huge target, just about 2-to-1 risk reward on this one. But as the YM was a $300 to $400 loser, you know, if this one hits, then you see how the math works, as we can have losing trades, but if we keep them to a minimum, and we can have winning trades at least 2-to-1, like I showed you, the earlier trade was about 8-to-1. You know, we can handle a lot of these small losers with those types. So we'll see if this one can finally make one last push there to the target. Okay, so we did just hit the target there at 1939. That's our minimum wave C target. You can see there's another target up here. This typical wave C, and you've got a third target up here. So you can see it gives you all the targets in advance, so that you can manage your trade. Our trend indicator here, as you know, you see the trend has picked up a little bit of strength here, but it has not hit this little bar here. If it does exceed that, it would tell us that this trend is strong, and we may want to hold the trade for more follow through and use our ATR stop, our trailing ATR stop. At this point, I'll go ahead and end the video for the sake of time, but you can see if we made $700 on this trade and we lost $300 to $400 on the other, we're net ahead on the day, and that's how we make money.